Hey guys, welcome to this week's podcast episode, and I've got a fantastic guest for you today, Neal Mcspadden, and he's from the tax Sherpa. You can see what all he does, basically maximize savings, save on your taxes. We'll talk about utility of taxes, but taxes are your biggest expense, but he saves solopreneurs and small business owners tens of thousands of dollars on their taxes all without earning any more or spending any less. So really interesting. I'm really happy to welcome Neal to the show. Very timely appearance.
Yeah, good to be here. We got a couple days before the big 415, but
Yeah.
the thing about the 15th is that it's only a deadline if you owe money. So if you are, a W-2 employee, like a physician or an engineer or something of that sort, most of the time you're probably going to get a refund unless you were doing something super aggressive. Which I'm not opposed to. But yeah, so it's only a deadline if you are owing money. Then you got to file an extension. You got to put in a payment if you have one. Otherwise, they'll start charging interest. But everybody's getting a refund and everything. The IRS, if they owe you money, you will never hear from them. But if you owe them money or they think you owe them money, then you'll start to get letters and things like that.
Yeah.
So definitely want to keep up to date on that.
Yeah. Yeah. Like I said, if you get a refund, basically you gave the federal government a 0% interest loan.
That is
And
correct.
but it's always nice to get that refund. But if you have to shell out money, it's like, oh man, but it's actually a good thing because you can use that money to work for you during the year. So yeah.
Yeah, clients who have to make that decision throughout the year. It's like, well, do I want to put in estimated payments or do I want to keep that money and do something with it? I tell them, so if you don't, they'll charge you extra. And
Yeah.
so there's an underpayment penalty, which is, 3%-ish usually
Yeah.
of whatever the tax is. So 90 something percent of the people I go through that with, they'll say, I'll just keep the money and pay more, pay a little bit more later because I can make better use of that money in my own portfolio than they can with just covering that penalty, basically.
Yeah. So here's the one question I have is, as a solopreneur or entrepreneur and, you've got your quarterly estimated taxes,
Mhm.
especially with 415, right? You've got the year prior, that tax return, if you
Mhm.
owe money, and then plus you have that first quarter of the current year. So it's
Yep.
almost like you get double taxed. So
Yep.
my question for you is, I was thinking about this. I was like, well, what happens if like it's because these quarterly estimated taxes, as long as by the end of the year you pay, kind of, approximately, what happens if you skip 415 like that Q1, or
Mhm.
you just pay a little bit less, but then you make up for it in like in the for the was it the July, or actually
Mhm.
July, or the next one, the
Yeah.
Q2 one?
Yeah,
Oh,
it's uneven. So it's 415, 615, 915, then 115. So yeah, so if you ask the IRS that question, they'll tell you, well, you should have made your fourth quarter payment back in January and you wouldn't have that issue.
uh-huh.
But a lot of times, like if you're in like a syndication or you have some other income that you don't know what it is yet, and that's not realistic. So the the real life answer is that, well, two things. So one is that if you have uneven income,
Yeah.
then this is on the form 2210, which is the underpayment calculation worksheet. Um, if you have uneven income throughout the year, then you can actually put in the worksheet that, those that unevenness. And so if it works out such that Q1 would have been a lower quarter anyway, you can go ahead and pay less and they won't
uh,
bother you about it. Also in the real world kind of scenarios that, if you make it up in Q2, Q3, Q4 so that you wouldn't have a balance due, in the following year,
yeah.
then, they'll charge you a little bit just for that first quarter missed payment,
uh
but it's almost a negligible amount at that point.
Yes.
So yeah, there are definitely cash flow management strategies you can apply. It's like, well, how much do I want to allocate to the different things? Versus, Q2, Q3, Q4, or just pay it all at the end or what have you. It kind of depends on how
Yeah.
aggressive you want to be as far as, your investments. and how much you just don't want to pay them. So when I talk to some people, it's like, well, I'm not going to pay them a dime sooner than I have to.
Yeah.
And that's just a philosophical stance that I have.
Yeah.
So if you're one of those, then yeah, wait till the next April and you'll pay a little bit more, and that's just how it is. But you'll have your money. So
Yeah.
yeah, so it's not the end of the world if you miss a quarter. But again, if you ask the IRS, they'll want you to pay, as much as you can as soon as you can, and give them
Oh,
those interest-free loans.
yeah. So they so basically they can go fund wars and,
Yeah,
kill
pretty much.
innocent civilians and, bail out the rich people.
So so over the past couple of years, I've been coming to this conclusion that taxes as a whole are unnecessary. So we're running $2 trillion deficits or $3 trillion deficits now,
Yeah.
and the CBO just came out with a report saying that basically they do 10-year projections, and basically the deficits from under current budget projections are going to be at least $1.6 trillion from here on out. It's not that long ago that the whole federal budget was $1.6 trillion.
Yeah.
So we could just fund that budget with just inflation and or net borrowing, whatever they want to call it. And
Yeah.
we wouldn't have to, I'd be out of job, but we wouldn't have to file taxes at all.
It's quite interesting. Yeah, there's like I said, so, one question I have it for you is this your we can't really fight the taxes because that's the law, but
Mhm.
one thing it's talking about is four tactics this is interesting. Four tactics to save you 18,000 on your taxes.
Yeah. So, we've kind of come up with over the years this tried and true kind of approach, especially for solopreneurs, business owners, independent contractors. It also works for if you're a W-2 person, but you don't have as much flexibility because when you have a W-2, they get you upfront. They pull out taxes on the front end. So there's less to do there, but things can be done. So basically, money comes in, that's going to be your revenue, and money's going to go out, that's going to be your expenses. Or after those two things happen, then there's a multitude of choices to make. So a lot of this revolves around entity structuring. There's over 23 million businesses in the U.S. that are structured, in my opinion, in the wrong way as far as tax optimization. And then there's also additional strategies. There's meeting strategies, there's reimbursement strategies. If you have kids of the right age and a couple other qualifications, put them on payroll. There's compensating yourself, optimizations to be done there, retirement planning, all this kind of stuff.
Mhm.
And we have a kind of set of four of those things that work for just about every business. And so that's going to be uh, 92% of the time, S corp is going to you're going to want an S corp in your mix somewhere. You can
Uh-huh.
have partnerships that feed into your S corp. So like if you're doing joint ventures with other people, you see that a lot.
Uh-huh.
Or if you want to separate assets into different LLCs for liability purposes, that's all fine. But it's all going to flow into an S corp as kind of like your home base. And like I said, 92% of the time, that's going to be the way to go. Um, Meetings strategies as far as having business management meetings for yourself and taking meeting rental expenses for that. If you do it under specific guidelines, then it's basically tax-free income. Reimbursements for yourself from your business for the business use of your stuff, cars and travel and that sort of thing. Um, and then optimizing your own compensation at that level is those four things together. 18,000 is actually a lowball number. I always do that in a conservative kind of way
Yeah.
because where that number comes from is like if you earned 100K and you implemented these four things and you did it in a reasonable thing and you're married filing joint, you got two kids, that's already putting you in an advantageous position. But even with all that, your it comes out to 18,179. I think it's the number. But oftentimes, we'll save clients, we did one the other day, it was 32,000. Another one last week, it was 28,000, but with the same strategies. But, everybody's numbers are going to be different depending on what your numbers and what your situation is.
Yeah. Yeah. The other question, like I said, so here's another thing I talk, what about like solopreneurs. Let's say they make
Hmm.
like just like they make enough like six figures. Let's say they 200. Like,
Hmm.
what's the income level at which you should start considering S corp? Because like a lot of doctors are locums,
Hmm.
so they get 1099 and they
Yep.
make like six, 700K. Of course, you want to S corp, but what is the kind of the income threshold at which you say, I don't want to file S corp, but I have a business and I can, deduct my expenses kind of like as a, what's it called? It's called I don't know what it's called, but it's just kind of self-employment. I think that's what
Hmm.
it's called.
Yep.
They like, what are your thoughts on that?
Yeah. So if you talk to 10 different accountants, you'll get 10 different answers to this question. Uh, and I've heard a huge range when I've talked to clients as far as what other people have said. So in my opinion, because what happens is, if you're doing an S corp, it does increase the complexity. You're gonna have to file an additional return.
Yeah.
You're gonna have to, you probably have an entity anyway, so that part will probably be the same. But it's more work, it's more overhead and all that kind of stuff. But in terms of like where's the break even, for me, it's low. 30, 40 grand, and it's worth doing. And so there's two components to that though. So one is that you'll just come out better on the tax side. And we are, what we do, we're always looking to optimize on the tax side, audit risk. So I don't know if you've heard the chatter out of Congress and the White House. They are looking to audit a lot more. And the IRS puts out a publication every few years called the Tax Gap Report.
Uh-huh.
And the gap is they say we think Americans should have paid us, this much, and we actually collected this much, which is a smaller number, and the difference is the gap. And
Yeah.
they break down the different sectors that the gap occurs in. And the single largest uh, category, which accounts for a third of the gap, is on 1040 Schedule C. So that's the profit or loss from business of either an unincorporated entity, like you're getting a 1099 to your personal name, or if you have an LLC but it's disregarded, it still files a Schedule C.
Yeah. Yeah.
And all the headlines over the last year or two have all been like, if you're making over $400,000 a year, we're going to make sure you pay your fair share, all that kind of stuff. So, the locums doctor making 600K, that's you. They're looking for you.
Yeah.
So, the other advantage to shifting it to an S corporation is getting it off your tax return, and it's going to reduce your risk of audit by about a factor of 10.
Nice.
It's hugely beneficial, even if there's no tax savings. That's still a benefit of just
Yeah.
reducing your risk of audit.
The other question I get it a lot is because I know a lot of people they stress about the 415 deadline, but then a lot
Mhm.
of especially high net worth and then a lot of the the 100 millionaires and
Mhm.
the billionaires, they do this strategy where they file an extension and then they file in October.
Mhm.
And then they said your risk of audit in October is a lot less
Yep.
because it's like, so what is your thought about using that as a tax strategy?
That's true. So what happens is each year the IRS picks a pet topic, and we don't know what it is until like 2 or 3 years later. But one year, a few years ago, they were looking at charitable contributions, and so they come up with a quota. They say we're going to examine 700,000 things, tax returns that have this on it.
Yeah.
And as the tax returns get filed, that quota gets filled up. And once that quota is reached, they stop. So so if you're doing something that you think is more aggressive, or if you just don't want the hassle, then yeah,
Yeah.
you can wait. Now, the extensions, the thing to remember about extensions is that it extends your time to file paperwork. It does not extend your time to pay.
Uh,
So that's where that if you owe money, they want it by 415. Otherwise, they're going to start charging you. That's just something to keep in mind. But
uh,
even if you're getting a refund, you might still want to wait just to, if cash flow wise that works for you. And
yeah.
if you just want to reduce that potential problem. So like random getting your name picked out of a hat, chance of audit is about 0.5%.
Yeah.
So you can reduce that if the longer you wait, the more it's reduced, basically.
Yeah. It's quite interesting. So basically, the billionaires, if they even owe a tax refund, they would basically forego that the free loan to the government
Mhm.
just to avoid the audit. But
Mhm.
I was just wondering because every tax year it's such a waste, like it's just such a waste of resources, and it's like you don't see much good coming out of it. It's just like, it's like just so wasteful, and
Hmm.
just so I'm just but again, I'm sure there's but here's another question I had for you
Hmm.
is this idea where what are the biggest mistakes for business owners and that they should avoid?
Well, I mean, that's a big question. So, the way I look at it, obviously taxes is going to be either your largest expense or maybe your second largest expense, if maybe if you have a big labor component. Um, so, not taking the time to actually fix that is, I think, going to be the largest issue. Because we'll kind of across the board, we'll look at somebody's situation, we'll do what we call a survey call, and we'll say, okay, based on the numbers you're telling me, we think we can save you, 20 grand, 30 grand, whatever it is.
Yeah,
And, so that's great and all. But the
yeah,
important thing to remember is that this is every year, right? So if you're saving, and this is like cash in pocket, right? So if you're saving 30 grand a year, it's like, well, if I then turn around and invest that, whether, it could be invest in anything, real estate or stocks or crypto, whatever.
yeah,
Um, what is the opportunity cost of not doing that over your working lifetime?
yeah,
And, if we're talking 30 grand a year, it is enormous. So for whatever business that you're in, at some point you're going to retire, right? You need to build a portfolio. You need to invest for the future. Because Social Security, assuming that it's there, is not going to cover much. It doesn't cover much now, and it's scheduled to run out of money here in a couple of years. So you have to build that asset base for yourself. And I have a lot of doctor clients, and doctors are great at earning money. They are terrible at keeping it. So
yeah. Oh, yeah.
I've got one guy I'm thinking of in particular. He buys a new $120,000 car every year,
Oh,
and it looks great, but what do you get? What are you putting aside? So that's an issue. And that if you go back to Millionaire Next Door, Thomas Stanley was talking about that.
yeah,
Uh, so that money that you're giving up to the government by not paying attention is it just a lifetime of opportunity cost that you're missing out on that is going to be like 7, 8 figures come retirement age. So to me, that's the biggest mistake people make, and it's really just a matter of taking the time. It's like we get so busy doing the thing that we're doing that we don't take the time to operate at the management level. And part of our tax strategy with our monthly meetings is to actually set aside a day and go over your books and review your business, and then just improve on what's working and decrease what's not working. And then that spread over time will increase or improve your business and give you the time to step back and really make those strategic level decisions. So it's just critical to actually do that level of work.
yeah. I love that. Um, so yeah, it's like I said, tax planning, tax strategy, these are kind of I guess if you owe taxes, that's a quality problem. But of course, if you're like in the tens, the hundreds, hundreds of thousands, the millions of,
Mhm.
that's a big number. So,
Yeah.
and you don't really see much come out of that. So, how can people contact you and reach out to you, check out your business, etc.?
Yeah, best thing to do is go to taxsherpa.com, and you'll see a link at the top, book an appointment, and that'll get you on our calendar with one of our staff, one of our tax experts. And we have a four-part approach. So we have the survey, the route, the trek, and the compass check. So survey is when we sit down with you, we kind of go over your situation. We'll say, okay, what's your family situation? What's your income? What's your expenses? What do you have currently as far as entities and all that kind of stuff? So that's just establishing where you are. The route is figuring out where we can go. It's the map. How do we get from here to there? What strategies do we need to implement? Do we need to create new entities? Do we need to put the kids on payroll? Do we want to set up a charitable foundation? And then the trek is actually getting there. So that's doing the work.
Yeah.
Implementing all these things. And then, like everything else in life, things change, right? So our compass check is our updates, that we sit down, usually quarterly, sometimes twice a year, just kind of depends on the situation. and we review and we say, okay, what's going on? Are we online with our projections? Is revenue up? Is revenue down? And then just making those tweaks along the way so that by the time, tax season comes around the next year, that we are in a good position that, good or bad is relative, as far as, if you're paying 100 million in taxes, it probably feels bad, but, at least you'll have a defined thing and you'll meet your expectations. That's really
Yeah.
what we are going for, is to map out the road ahead and then actually end up where we think we're going to end up. Now, obviously, even I have a call later today with a client. Even with all the projections that we do throughout the year, we still overpaid by $18,000, so he's getting a refund. Not terrible,
Yeah.
but no matter how good our projections are, they're never going to be perfect, right? Because things are going to
Yeah.
change last minute. It's like, oh, Christmas was bigger than we thought it was going to be, or it was less than we thought it was going to be, so that's going to change our year-end numbers. So it's always going to be something like that. But we're in the a pretty tight band as far as what our expectation is.
Yeah.
So yeah, but taxsherpa.com is the best way. We've got a blog. We've got you can go to my YouTube and check out usually weekly calls that we do. So the last 2 weeks I've been ill, but usually every Tuesday we do like a Q&A kind of thing of just answering questions that have come in from clients over the last little while. And we stream that on YouTube and LinkedIn and Facebook, I think.
Yeah.
But yeah, that's the best way. And you know, everything the difficulty with the tax world is that everything depends. It all depends on your situation, what you have going on. What's true for you is not necessarily going to be true for your neighbor.
Yes.
So we have to examine what's going on in your particular situation and then what applies to you.
Yeah. It's almost like being a doctor. Like you have very common conditions, but every patient is different, and
Yeah,
genetics and
yeah.
all of that. So
Or somebody calling, I found this white pill in my cabinet. What is it? That's every pill. That doesn't help.
yeah, exactly. Yeah. Excellent. And for like I said, for all the audience, be sure to give Neal a like and follow on his socials. Check out his website, his services. Obviously not this year, but following. And with that, thanks so much for coming onto the podcast.
And the time to plan is always now.
Yeah,
So
exactly.
it's never too early to get started on setting up for the following year.
All right. Well,
All right.
excellent, excellent. All right. Well, like I said, I have a fast turnaround.
Mhm.
So, your episode will release in the next few days. And
Great.
I've given you a 5-star review already, I think, but if not, I will. And I'm really growing on YouTube and LinkedIn, Instagram, and Twitter. So we'd love
Yeah.
to connect with you there. But
Yeah, absolutely.
yeah, excellent. And any questions or anything or
No, I mean, this is fun. I think it
yeah,
just
yeah,
flowed pretty easily.
yeah. I'm going to actually I'm just filling out this 5-star review now.
Yeah. I am new to Podmatch. You're actually my first podcast match, so I'm
Yeah,
not quite sure what to do here. I guess I click confirm.
yeah, confirm. And if I think I followed you on all your stuff, but let me just double check. Okay, so let's see, Podmatch. I just followed you on LinkedIn, and I'm gonna follow you on Instagram, follow, and then Facebook. Okay, all right.
Okay, so I did my 5 stars there. So it should be yeah, and I was actually on your YouTube channel earlier this morning.
Oh, okay, excellent.
Do all the follows and the thumbs ups and
Yeah.
all the things.
Oh, you got 1.19K subs. That's good. It's
Yeah, I've been on YouTube a long time. So if you go
oh
back in the archives, there's all kinds of random stuff.
yeah.
But yeah, it's half tax stuff now.
Well, excellent, excellent.
Yeah.
All right. Well, thanks so much, and thanks for connecting.
Yeah, absolutely. And
All right.
we'll see you on the streams.
See ya.
All right, have a good one.